General Motors has just delivered one of its strongest quarters in recent years. Despite ongoing challenges in the EV market, the company beat expectations, generated over $5 billion in automotive free cash flow, and raised its full-year guidance for the second time in 2026. Is GM proving that traditional automakers can still outperform? Let's break down the numbers. General Motors delivered a strong second quarter of 2026, demonstrating resilient execution in a challenging automotive market. Revenue reached $48 billion, up nearly 2% year-over-year. Adjusted EBIT increased to $3.94 billion, while adjusted earnings per share climbed to $3.57, reflecting significantly stronger profitability. Automotive free cash flow surged to just over $5 billion, highlighting the company's ability to convert earnings into cash. Beyond the financial results, GM maintained its leadership in the U.S. market, remained the #1 fleet seller, and raised its full-year 2026 guidance for the second time this year, signaling growing confidence in its outlook. GM's strong financial performance was backed by solid execution across its core business. The company remained the #1 fleet seller in the United States, with fleet sales increasing 16% year-over-year, driven by strong commercial and government demand. At the same time, GM continued its disciplined pricing strategy, keeping incentives below the industry average while maintaining healthy inventory levels. Its full-size pickup trucks and SUVs remained key profit drivers, reinforcing the company's leadership in its most important segments. Beyond vehicle sales, GM's digital business also gained momentum. OnStar deferred revenue reached $6.3 billion, while Super Cruise continued to expand its subscriber base, supporting the company's long-term software and services strategy. Management's confidence is reflected in its updated outlook for the rest of the year. GM raised its full-year guidance for the second time in 2026, now expecting adjusted EBIT between $14 and $16 billion, adjusted earnings per share between $12 and $14, and adjusted automotive free cash flow of $9.5 to $11.5 billion. The company also continued returning capital to shareholders by repurchasing $2 billion of stock during the quarter, retiring approximately 25 million shares, while maintaining its quarterly dividend of 18 cents per share. Together, these actions signal confidence in GM's financial strength, cash generation, and long-term strategy. While GM's outlook has improved, investors should continue to watch several important risks. The company is still adjusting its electric vehicle strategy to better match market demand and changing regulations. Since the second half of 2025, GM has recorded $10.9 billion in EV-related charges, although management says the majority of the expected cash impact has now been addressed. Beyond electric vehicles, global trade policies and tariff uncertainty could continue to influence production costs and supply chains. Competition in the U.S. automotive market also remains intense, making disciplined pricing and operational execution critical for sustaining profitability in the quarters ahead. Overall, General Motors delivered a quarter that demonstrates financial resilience and disciplined execution. Strong profitability, solid cash generation, and another increase in full-year guidance highlight the company's ability to navigate a challenging market environment. At the same time, management continues to invest in digital services while returning capital to shareholders through share buybacks and dividends. Although risks remain around the EV transition, tariffs, and industry competition, GM enters the second half of 2026 from a position of strength. For long-term investors, the company's latest results reinforce confidence in its strategy and future growth potential.